Hello. Um, we would like to prepare and discuss next week. So, as you may know, this is Christmas season, and market is going to be very quiet. That's my expectation, or at least liquidity is going to fall next week and the week afterwards, and we might have some spikes in the markets due to low liquidity, and these are typical opportunities for our reversal models. But what we expect is to see some trading range, especially due to the rather neutral release from the FOMC. Next week there are no specifically important calendar news. Basically, we don't have anything really significant. So, sterling, GDP, US durable goods, and GDP. It's interesting. It's important, especially the US GDP, which is expected to be rather high. So, and I expect there is a good chance that the market is going to be disappointed. So, yeah. I think we have basically one pair to trade. The dollar against the sterling could be interesting if you have a differential here, meaning if you have a good sterling number and a negative US number. But what happens when we have low liquidity is the market can be erratic, because I don't know, some year-end flows could dominate any fundamental news. So you might see a totally illogical behavior in the market. Yeah, the Japanese CPI. This would be interesting to have a look how inflation is doing in Japan. And basically that is it. So the market is going to be very quiet basically from Wednesday, and Monday and Tuesday we might see a little bit of trading, but basically as we view the situation, you can just take some holidays and relax. So I wanted to take this opportunity to review the trends. So I basically selected, fitted all the major currency pairs that I see with their current trends. So this is kind of more of an outlook in the discussion rather than signals. Euro USD. As you can see, we have a long-term downtrend. And interestingly enough, we are just around the middle of the channel. The euro is interesting from the point of view that it's in a trading range, similarly as the sterling. So it has tested several times this 125.60, 125.50 barrier and was not able to break it. And now, so on Friday, we had, at the end of the day, again on low volatility, some kind of a break below 122.50. Very unlikely to see that we see a continuation. So you can trade, you can try to buy the euro at these levels. There is a fair chance that it won't go further down. So the euro USD in a trend range, and we expect the currency pair to go back into the trading range. Yeah, also from a perspective of our trend indicators, we see that we had something close to a bearish engulfing here, which was a good signal to sell. and currently we are basically flirting around the zero line on the Promorers 2.0 indicator. The zero line here is basically if Promorers 2 is above, it means buy. If it is below, it means sell. So the euro has been bearish for a long time, as you can see on the daily chart. And only recently we are starting to see some attempts to go below zero. So the first occurred here, didn't succeed. The second occurred here, and it was basically pushed down by the FOMC. Now, our view, nothing really serious. So yes, everybody expecting to see an increase in interest rates, but this has not happened yet. Will not happen in the coming 2 or 3 months, and there is a fair chance. So we are basically in a situation where the news should dominate, not the trend, and most likely we are in a situation where we will be stuck in trading ranges, even I think for a couple of months easily. This could happen. I was expecting the euro and the sterling to break above, because I was not expecting anything significant from the FOMC meeting. So I was expecting it to break above this barrier here and to correct. Well, it didn't happen, and it doesn't seem like we will break above it anytime soon. So, and I don't expect either that it will go really below. But okay, it's a trade that is not nice from the point of view of the downtrending channel. So if you would like to be safe, you'd rather buy at 120.50. So but on low volatility, yeah, with the tight stops, you can try to buy here with something like a 30, 50 stops, 50 pips stop. Sterling, same thing, also a downtrending channel. In the case of the sterling, we are above the middle of the channel, which is suggesting that some point in time we'll have to resume our downtrend. Currently we closed really in the middle, right in the middle somewhere. This is the middle of the channel somewhere here. So basically we closed right in the middle. I expect also trading range here, so nothing will happen I think in the coming 1 or 2 weeks. So either we go up or we go down. But yeah, trading ranges are not very nice. They typically you would prefer to stay away from it. The yen is not in a trading range. That's the positive news. But so what we can see is we have a support area today that is in between 116.50, 117.80. Most likely the yen will continue going up. That's my expectation, but it's not in a nice spot for trading opportunity. We had a very nice sell signal here that we shared with you, but now we don't like it. It looks like I want to stay away from the yen. So one of the scenarios that I expect could be happening with the yen is something like this, a downtrending channel after so some kind of correction around here, and then we'll go like this, bum bum bum. That's my expectation, but it didn't happen yet, and so it's unclear. The Australian dollar Australian dollar has two trending channels. One on hourly, as you can see, very smooth. So hourly downtrending channel gives us and remark, we are again just in the middle of the channel. Exactly. So it's like no opportunity to trade from this point of view. Buying, you would need to go below 80, 50, something like that, and selling, well, above 82 at least. That's for the hourly downtrend. We have also a 4-hour downtrend, as with the euro and the sterling. And here it's a little bit better. So from a 4-hour point of view, it looks like a little buy. Not a strong buy, but a little buy. But it doesn't look like it will go test any new lows either. So if we see the Australian dollar going below 81, .81, then we could look really at buying it. So I think it has fallen a lot. It has fallen a lot since basically September, and it gives some yield. So yeah, buying Australian dollar. And now the most interesting trend line that we have currently, the gold bull market. So gold basically has been in a bull mode since 2001, 2002. And we had a very clear trend line supporting gold. We had some very nice sell opportunity here in 2011 when there was a downgrade of the US government. But we are basically now in a situation where we are testing area where basically we are wondering whether the bull market in gold has ended. That's the big question. So from this point of view, on a weekly chart, we have a very big opportunity to buy gold, because it could easily go back to $1,600 for an ounce. The question is, has the trend ended? Well, I am not able to answer this question, honestly. I've been trying to figure out, but it's unclear. The trend has started in 2000, in my view, because after the dot-com bubble, the US government started reducing interest rates. And we are now in a situation where we might have an inflection point where the US government, let's say the FOMC, is starting to increase interest rates. So this could be maybe really, if we break below 1,150, this could be something very significant for gold. Of course, personally, I don't expect that the US will stay without printing money and in the coming years. So even though we have a very nice situation now with very positive numbers out of the US, having such a strong dollar will start reducing the competitiveness of American companies, and not having printing money behind the stock market will not be able to grow anymore. And also we have these problems that might raise from the low price of oil, so many jobs will be impacted in the shale oil industry. So all in all, I think I really believe that gold will continue to go higher in this period where we are transiting from a dollarless a goldless dollar to something new, but maybe it will break. So very difficult trade here, but think about it. Maybe you'll have your own opinion. So one of our favorite trades that remains actual is the USD CAD. So on 4-hour chart we have a very nice trend line, as you can see, a trend channel I mean, and we are rather above now the middle of the channel, and the Canadian dollar has some other positive background. So we would say maybe the only really nice opportunity that we see is shorting the USD CAD above 116.50, and if you reach 117 then it's a golden opportunity. So I would really recommend this if it occurs. Most likely it won't happen. I think we will stagnate in between these values. The New Zealand dollar is also in a downtrend channel. Very interesting to notice this upward resistance here. So it's like maybe the most bullish from all currency pairs that we've seen against the dollar, because it really wants to break from this downtrending channel, but hasn't been successful 1, 2, 3, 4, 5, 6 times. This typically what happens when you have this typical repeat of a resistance test is when we break above it, then we will go very strongly up. So when this happens, this could be a buy signal. So just take the trend line down from the stops, and once you see a strong upward candlestick with a closure above, consider buying the NSD USD with the tight stop. But unlikely to happen, I think, during these low liquidity days. Yen, big uptrend. Yen against the euro, big uptrend on weekly charts. Nothing special to say here. I think that was the main channels that we've identified. So, as I said, Proparios 1.x models really point to selling in the shorting the USD CAD. Probabilities are already around 80%. This is a nice short in our view. Really good to try. Yeah, this I have already mentioned. I think that's all I had to say. Basically, I think you can relax and do something else, and if you see some crazy move out close to the trading ranges or to the areas I mentioned, maybe you could try to trade it. Otherwise, I wish you a Merry Christmas, a Happy New Year, enjoy it, relax, and we will talk again about trading next week. Thank you.